Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, market reversals, we've seen all that stuff, right? We left you off with that last video. In that video was a really good lesson about what happens to markets after major holidays. Well, now I have something else I want you to look at, which I thought was quite interesting. Doing some homework on charts, I see a pattern that repeats and repeats and repeats. And you know what, traders? That is what makes a good analyst. A good analyst realizes when he sees something that he has seen in the past and it looks picture perfect, like it's going to happen again, and he goes with it and it happens. Now, as many of you traders know, analysis is extremely redundant. Sometimes you get head and shoulders over and over again. Sometimes flags come up, one flag after the next, some form of a pennant. Sometimes it's the two-day rule. Sometimes it's, you get all kinds of formations. But basically, what you will find about those formations is they are quite repetitive. Now, with that in mind, this video is dated for Wednesday, 12/03/08, getting towards the end of the year, traders. And I have an illustration on the board I want you to take a look at. I actually have a couple of charts which I'm going to show you, which are the actual market, the S&P. But for now, my sloppy little illustration, it's not so bad. It's sort of close to what the charts will look like. So indulge me for a minute and watch this. Okay, traders, the S&P, the daily bar chart, has a setup that looks very much like this one I'm pointing out to you here. What you have, you started off the beginning of this year with a major head and shoulders formation. An upright head and shoulders formation, which went into a parallel channel. The market traded within that channel, came down and made an inverted head and shoulders formation, popped up for just one day, turned around and went into another parallel channel. Then, where we are right now in time, created another inverted head and shoulders, and I did a video about this one, and I got enough bulls writing into me, and I told them, you're nuts, it's going to go down, and the market in turn did go down. Now, here's what I want you to look at. Head and shoulders formation, parallel. Head and shoulders formation, parallel. We are at a head and shoulders formation. Why not another parallel, traders? You had the same little jump up right here out of the right shoulder. You have the exact same thing as of yesterday's trading, Tuesday, 12/02/08. You have us sitting right here. Why shouldn't we just go into another parallel like it did here, and like it should very likely do right here? You see the picture, traders? Head and shoulders, parallel. Head and shoulders, another parallel channel. Now we have an inverted head and shoulders and what looks like it should develop into another parallel channel on the downside. Why wouldn't it do that? Well, you know what? If it were a bull market or you had some bullish news to give me, well, then maybe I'd say it'll go up. But we're bears. We're in a bear market. It's gone down after this formation. It went down after this formation. And it is going down after this formation. And we are just about there now. So I am here to tell you once again, do not fall in love with the upside here. You may get a little bit of a rally to get to the top of the channel. So what, traders? I don't think it's going very high. Interestingly enough, even if you got out of this parallel, if you connect the trend line from the top all the way to here, you will find that there's resistance just above the parallel anyway, above that parallel channel. This market's not ready to go up. I don't think we've put in any bottoms. You know me, I'm as bearish as can be. But now, to convince you that this is what likely is going on next, I want you to look at the actual charts. This is the S&P, the real S&P chart as it looks right now as of today, traders. Let's go look at some charts. Okay, traders, the first chart you're looking at is an S&P December daily bar chart. S&P December daily bar. Traders, this is the exact same picture I drew for you on that whiteboard just a moment ago. The massive head and shoulders that dropped us off at the top of this market. The parallel channel. Another head and shoulders, this time inverted, a parallel channel. Then we put in another inverted head and shoulders right up until today. A little pop out. another parallel channel. Now I know that this chart is probably not clear enough for you to see it in, so I'm going to show you the very same chart again in just a moment, except for I'm going to move this over a little so this area blows up, traders. Let's go look at this one more time. Okay, traders, you are looking at the very same chart. I have just basically moved it over to the left a little to expand on this so that you can see it more clearly. This is the end of that first big head and shoulders. The head, the right shoulder, the left shoulder, of course, is over here where you can't see it at this point. We go into a parallel channel. You can see it hit the top, bottom, top, and then went into what you can see outlined right now, and that is an inverted head and shoulders. Came out of that inverted head and shoulders, and traders, let me tell you something. I called for this inverted head and shoulders to give us nothing more than a little rally and then a break. I got my fair share of hate mail from it, but you know what happened 2 days later? The market rallied just a teeny bit, and we had a big break, and many of you started to realize that we have a pretty good handle on this at the Emini Trading Academy after this series of videos a couple of weeks ago. Well, here we are again, traders. I'm here to show you we had that inverted head and shoulders, teeny little pop, went right into a parallel channel. Now, where we are today, we had, once again, an inverted head and shoulders, a teeny little pop right to here. Why shouldn't we just head right back down into this channel, traders? The channel at this point does not exist yet. I have made this channel up. I've put it in its place, and all I did was take an exact duplicate copy of this one and drop it right next to it. That's what I think will happen next. Again, head and shoulders formation, parallel channel into a drop. Inverted head and shoulders formation, parallel channel into a drop. Inverted head and shoulders formation, why not another parallel channel into a drop? This is a bear market, traders. That, if you ask me, is something that we should all be expecting right now. Any rallies I would be selling. I would not be a buyer of dips in this environment. I would sell anything that pops up here. So, you see those charts, traders? Traders, look, that looks pretty cut and dry. Do we know that's going to happen for sure? Well, how could we possibly? Indicators surely are not pointing up, but I will say this. The indicators on the S&P, Tuesday night's analysis for trading on Wednesday, some indicators are pointing this way, some are pointing that way, some are pointing this way, some are pointing that way. I don't know where they're going, but I know we're in a bear market. I know you analysts out there, if you're looking at your technical indicators, the widely ones that a lot of people use out there, stochastics, moving averages, you know, if you're looking at those, you will know, like I did this evening, that they're pointing in different directions right now. They're not all pointing either up or down. On a day like that, you normally will get volatility on both sides of the market. So I think tomorrow's S&P trading is a two-sided market. You may get some up, then some down. Remember that we're in a bear market, so we sell those rallies when they happen. Sold. You see a rally? Go like this. Oh, it's a rally. Sold. That'll help you, I promise you. All right, traders. So we have British pound set up. We have a setup on the site right now. I know where I'd like to trade British pounds. I have a pretty good idea what we think is the sweet spot for British pounds. Come on down to the site. It's www.livewithoscar.com. Grab yourselves a membership. Jump into the chat rooms. Take a look at what we have for the Omni, for S&P, and for the British pound. If you're ever with me in those chat rooms and I don't have the trade out there before your eyes, as the trade develops, I will tell you about that trade in the chat rooms, on camera, on microphone. I type it to you, flash pop-outs go out. We make sure you're informed when we're going to trade. You even get emails. So make sure you come on down to the site, traders. We are a full-fledged trading academy. In other words, we are educators and we educate you traders how to look at analysis in this fashion and how to figure out applying it going forward. I promise you this, if you come to my site, I will help you become a better analyst, which in turn will make you a better trader. All right, traders, that's it. I'm doing a short video tonight. I'm getting out of here. Give me a call anytime day or night, 702-629-4755. And as always, place your stops first. Always use stops. Stops are your best friend. And keep your emotions out of trading, traders. One of the best ways I can help you to keep your emotions out of trading is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.